So I want to talk about paying off credit card debt. Now, credit card debt is a huge problem across the Western world. In the UK alone, credit card debt is worth something like £150 billion. So that's really a lot of money that each of us has on those bits of plastic that we're spending each month. And this kind of debt not only has a kind of economic negative impact, it also has a social one. It's associated with people being highly stressed, anxious, and even depressed. So how can we help people to pay down their credit card debt? Now, actually the science we have from behavioural economics and consumer psychology can really help here, because it really goes against the prevailing wisdom in what people should do in this situation. Standard advice works something like this. It says people should pay off the debt that has the largest interest rate, or people should pay off debts by consolidating them together into one payment and pay that off. Now, I think that advice is actually terrible. What the research suggests is that when we're trying to tackle such a big goal, we should break it down into much smaller goals. That actually we need to feel a sense of progress if we're going to achieve those big challenges we have in life. And so research that came out of Northwestern University a few years ago really demonstrated this with credit cards. It studied 4,000 people, and it showed that people who paid off their smallest debts first were actually much more likely to achieve their goal of being debt-free after a few years compared to people who just tried to pay off the debt with the largest interest rate. So the lesson here really is that if you want to achieve the goal of paying down your debts, then try and focus on paying off the smallest ones first, because otherwise you won't feel that sense of motivation and a sense of completion over time. Now, the government's really aware that credit card debt's a big problem. And their standard way of trying to tackle this so far has been through methods like introducing a minimum repayment amount that you have to make each month on credit card debt. Now, as well-meaning as this policy might be, I actually think this has negative consequences for the average person. So research by Neil Stewart at Warwick University in the UK demonstrated this, that essentially having a minimum repayment amount actually anchors people towards paying less off their credit card debt than would otherwise be the case. So in a study of 400 volunteers at the university, he gave people randomly allocated into having a credit card statement that had a minimum repayment or it didn't. And when people were given a credit card statement that had a minimum amount, they actually paid off less of their credit card than they would have done otherwise. So there are really two lessons here. One is that maybe it's not a good idea just to try and pay off the debt with the largest interest rate. It might be better to pay off the smallest one first. And secondly, try and forget about those minimum repayment amounts on credit card statements, because actually you should be thinking about how much can you afford to pay, not just some random number that you get given by your company that you have credit with. Those two together, I think, can help people to pay down their debts much more quickly.